Welcome to the RGLT Economics. In this podcast, I want to discuss very briefly the quote-unquote value of the US dollar. There seems to be a dichotomy, and indeed I've seen some people really pointing to this dichotomy, and I'm quite dissatisfied with their explanation, and this is why I am recording this podcast. What this dichotomy is, obviously, is on the one hand, we have inflation in the United States inside the US economy being of record heights, and apparently the US dollar is losing value. But on the other hand, compared to a basket of foreign currencies, it appears that the US dollar is quite strong, that it's gaining quote-unquote value. What I want to explain in this podcast is basically 2 points, right? One is that the US dollar is indeed falling in value. Two things are happening. One, that assets are being revalued, and two, that other currencies, other fiat currencies may actually be worse. So let's go to the first point first. It's about the current situation in a recession, in a recessionary environment, and make no mistake, there is currently a global economic recession, and the United States is where this recession was first triggered, and it's also where most of the inflation from the last decade has been manufactured by money printing. And so it's, in my judgment, the one country, the one economic system that is most responsible for the current recession and the pain that everyone will feel during this recession. But nevertheless, during this recession, I think we will see several revaluations of assets. The economists that I heard, quote-unquote economists that I heard explaining the dichotomy of US values, basically they tend to suggest that the values of goods and services, they stay the same because they have the same utility. It's only money that is being depreciated. That simply is not true, because the utility of assets, the utility of goods and services change in response to a range of factors, right? The economic situation does affect the utility of a lot of assets. Just an example, a commercial real estate, when the economy is booming, having an office in a good, having a shop in a good section of a city is quite valuable. But when the economy is down, the value of that asset, of that real estate, actually comes down. And when the economy is good, when manufacturing is actually being ramped up, there's a lot of consumption, raw materials will go up in value because a lot of factories need that raw material. But when the economy is coming down, the value of raw materials, at least in the short period of time, during this recession, actually is coming down, right? And companies who are mining these raw materials, they have their own fixed costs. They have their capacity that they don't necessarily they can't always close down their mines and oil fields, etc. So what happens is that the price of raw materials come down. Normally, or maybe not price, but value of raw materials come down in a recession. What I think will happen in this recession is over time, the value of real estate, of collectibles, and when I say collectibles, I mean art, I mean cars, I mean watches, everything that people collect, games, video games, etc., baseball cards, cars, whatever. These things, consumer goods even, raw materials, and eventually even energy will come down in value. I think the one thing that will probably hold its value the best is food, because people need to eat. But the fancier types of food probably are not going to do so well. But fast food, processed food, canned food, I think those are the ones that reflect value the best, and they will hold their value. Price, of course, is different, right? Price is what you pay, value is what you get. And in a highly inflationary environment, it is possible that while the value comes down, because you have inflation, the price actually goes up. So the first point I want to make basically is that value is indeed changing. There is no fixed amount of value when it comes to most of the goods. You may consider, I think, food, especially the basic food, you can consider them as more stable and use them to judge the changes in the purchasing power of a currency. But other things in a recession, I don't think you can really use it as a measurement of a currency's value. That's number one. The second point I want to point out is that the US dollar is certainly not the only currency in the world. So even though the US dollar is losing purchasing power, it's losing value, as evident in the United States, because we have essentially a recession, value of a lot of goods are coming down, but the price not necessarily so. Of course, I think perhaps in real estate and in used cars, there are reports that price had already peaked. So that means that even price is coming down despite inflation. That basically only means that the value is declining even faster than the pace of inflation. Nevertheless, this does not mean that the US dollar is the only currency that, because it's performing poorly, that it must lose against all other currencies. I mean, there is no logic in this reasoning, right? The exchange rate of the dollar can actually be growing higher if the currency pair involves another currency that is much weaker, right? And case in point, the euro. I don't think the euro will stay for another more than 2 years. I think in 2 years there will no longer be any euro. It will be the eurozone economy will be in a completely different shape than it has been in the last decade. Even though the euro crisis has never really dissipated, the equity market, despite long-term stagnation in the eurozone, has never really had a good year. Right? Perhaps save for the last year, where there's a lot of money printing and forced lockdowns that really forced a lot of money into the asset market. I think now the markets are crashing, and they will continue to crash. The reason is very simple. I'm not the only one. I'm not the smartest, certainly, and I'm not the only one who thinks that the euro is not long for the world. And when the euro collapses, what's going to happen, I think, is a deeper recession in the eurozone compared to other major economies, compared to the US, compared to Japan, compared to Russia and China, and compared to even some of the more troublesome developing economies. And what this means is that if you have some assets in the Eurozone, whether you are a European or a foreign investor, what may be on your mind is, how do I extract my assets, my investment out now before it collapses? And I'm pretty sure that a lot of the major reason that the euro has collapsed in the last couple of months against the US dollar is capital flight. It's not speculation. There are people who want to suggest that this is because of speculation. I don't think this is the major cause. Yes, maybe there are speculators, but they are speculating. The thing that they are speculating on is not a greater fool's theory, meaning that other people will speculate even more in the same direction, but they are speculating on a fundamental, which is that the euro may not last and that the eurozone will experience continued capital flight. And when people sell their assets, they want to exchange their euro to another currency so that they can take it out of the eurozone. They will, eurozone economies, or take it out of the European Union. Well, a major way, a primary method or route is to exchange it for the dollar because it's the most liquid currency. This does not mean that the money goes to the US economy. It can be that we're talking about a Southeast Asian or South Asian or Latin American or African investor, and they take their money out, they go back to their own country, and they invest in they purchase assets in their own countries, all right, in Africa, wherever. It does not mean that money necessarily goes to the US economy. What it only means is that people are selling the euro and buying the dollar. We should not just from this single phenomenon extrapolate too much into what people are doing, how they're speculating. This is not really necessarily true, and I think not true. So this is the second point that I want to make. And in conclusion, I want to talk about just 3 points. I think there are 3 small points that I want to emphasize in the conclusion of this podcast. First point is that we have a global financial system. It's not regional. You cannot look at the US economy in isolation. The US economy is not good. Does not mean that US dollar is necessarily going to fall in its exchange rate. Secondly, US dollar in the short term can actually be quite strong, and especially against a range of assets. And this includes gold and silver, which are quite valuable and, in my opinion, undervalued. That does not mean that US dollar cannot go higher, because the use for those minerals, for those raw materials, are actually also coming down. Indeed, what that means is that the value of those assets are actually coming down. Silver and gold, they are not just monetary metals. They are also industrial metals, and their industrial use, their industrial value are coming down. Maybe in the coming months, we'll see that their monetary value will become more evident, and that would mean that gold and silver perhaps will go up. But with regards to the dollar, of course, they have gone up significantly in terms of the Japanese yen and the euro, and that is because those currencies are heavily losing value, losing purchasing power very, very quickly, faster than the recession is devaluing assets. That's number 2. And the last point is that I think if the euro collapses, and this can happen in the midterm, even though I think it's more of a long-term outlook, meaning in a year and a half, maybe 2 years. But if the euro collapses quickly, we can see a further contraction in the global economy. And at that point, we have to revisit the subject and see at that point what exactly is going to happen. Is the recession going to be so severe that that all these assets are going to fall in price, fall in value so fast that even some of the more inflationary currencies like the US dollar will continue to rise? Or is that the financial contagion is so severe that the US dollar also is going to a tailspin, and the Federal Reserve loses control, and perhaps at that point, even though the value of assets continue to fall, the price of assets may actually reverse. That is something that we will discuss when it comes. Thank you very much for listening to this podcast. Obviously, like, subscribe, share. I have a Telegram channel. I will try to remember to keep the link, to give a link in the description below. Thanks and have a great day.